Candlestick patterns. In this part 2 of the lecture of candlestick anatomy, we'll be learning types of candlestick patterns, how to identify them, where to identify them, the story each of those candlestick patterns are telling us, and how to also make use of them. My name is Mazi FX. I'm a forex trader, a businessman, a tutor, and my goal is to simplify forex trading for my community. So if you're somebody who is interested in forex trading, you want to learn, this is the right place to be. Drop me a follow, comment, like, subscribe for those who are watching on YouTube, share to your friends, and make sure you don't miss my live streams because I always come live during the morning session and evening session. Morning session, I give my outlook. That's during the weekdays. Then evening section, I come and teach. So follow my account, join my Telegram community so you don't miss on any information. All right. We also drop crypto signals and forex signals in my Telegram community. So let's dive into the topic of the day. Now we have numerous candlestick patterns, but I'm going to be picking out just a few, which I know that these few are the ones that a lot of persons are familiar with, and these are like the most candlestick patterns that you see whenever you Google to search for candlestick patterns. So let's talk about it. Candlestick patterns are segmented into two. We have the bullish candlestick patterns and we have the bearish candlestick pattern. Let's start with the first one, which is an engulfing candle. We have the bullish engulfing, and we have the bearish engulfing. The bullish engulfing, bullish candlestick pattern. The bearish engulfing is under the class of bearish candlestick pattern. So from what you can see on my screen here, right? See, the green candle is taller or higher, taller than this red candle. Bullish candle, bearish candle. Okay, this is a bullish engulfing. Now for this is a bearish engulfing. Let me type it. Let me type it here. Bullish and engulfing. I hope I got the spelling correct. Then this one is bearish and engulfing. Oh, so mistake here. Oh, okay. Sorry guys. Oh, that's a mistake. That's not how to spell bearish. Bearish. Bullish engulfing, and this one is a bearish engulfing. This is just a scenario where power change hand from the sellers to the buyers, bullish engulfing. Then this is a scenario where power change hand from buyers to sellers. Now the question now is, where do you make use of this? You make use of this as an entry confirmation around a demand or supply zone. Now I can't tell you what a demand or supply zone is to you because people trade different concepts, and every concept has a zone where they call their demand and a zone where they call their supply. So when I use the word demand or supply zone, you should know what I'm talking about, right? I'm putting the context to it. I'm not talking about just one strategy. Any point at which you consider a valid point to your strategy, right, where price is meant to give a reaction or a reversal, bullish or bearish engulfing is one of the confirmation. Now logically, let's say this is a demand zone, then this is a supply zone, and now in this case price was selling. In this case price was selling, got to this demand zone, and this appeared, the bullish engulfing. It simply tells you that buyers are now reacting from this demand zone, and maybe they're interested in taking price higher. This is one of the first signs you see, and most times to cause a reversal to the upside. Now in this scenario also, price is buying, gets to a supply zone or a resistance zone, and eventually a bearish engulfing forms there, It's a sign that sellers are now what? Pricing that zone. And from the look of things, price will most likely what? Reverse from that zone. So now let's go look for some examples. This is what? A structure, right? Not a valid structure though, according to what I trade, but this is actually what? A structure, a low and a high. And to a lot of persons, a structure is what? A demand zone. Now you see what happened. Immediately price tapped into that what? That structure. What is the first sign you can see? This is the what? The sells. This is the last sell candle. Then what happened? A bullish candle engulfed what? The previous sell candle. And what happened? Price moved to the upside. Okay, so let's look for a bearish engulfing. Look at this example also. This is also is what? A structure. And what happened? Price tapped into it. And structures are meant to be resistant or supply zones. What happened? You can clearly see that this is the buy to this point. Immediately they got there. What happened? We got a bearish what? Engulfing. And price did what? Price started tanking to the downside. So that is that for bullish and bearish engulfing. So let's dive into number 2. So number 2 on our list is the one we call what? The doji candle. This is a what? A small bodied what? Candle and a very long wick to the upside and long wick to the downside. Now let's assume this is 1 minute session, like I was teaching earlier, right? And inside the first second of 1 minute, buyers came in and they were pricing above the opening price. They priced all the way to this point. They couldn't keep up. Sellers came in, pushed price down to the opening, then what? Push it lower than the opening. Came all the way to this point and couldn't keep up. Sellers would pull back the price and they closed at just the middle. Either just the opening or the close, or just close to just difference in opening and close of the price. It simply gives you an indecision, meaning in this case, nobody is winning. We call this, let me write it out. We call it doji. Doji candle. Yes. We call it doji candle. It simply means indecision, right? Nobody is winning. That's why I said this one can what? Either work for the bullish or work for the bearish. It just simply means nobody is winning this war. In a case where you see such candle at a very valid point, maybe your demand or your supply zone, it simply gives you a hint that the people that would move price to that demand or supply zone have actually what? Decided to change their mind. They're no longer moving with momentum. Yes, because if sellers were the ones in charge, how did they suddenly get to this point and change their mind? Buyers are not challenging them. It simply tells you that they are also what? Cautious of that point, that they are willing to start taking out their orders. Okay, for their strength with that of buyers to match at that particular what? Demand point, it gives you a signal that, okay, I think the sellers are now exhausted. Price wants to what? Reverse. That's what it simply means. And on the flip side, okay, when it gets to what? Your supply zone, right? So your supply zone, price is buying and gets to your supply zone, automatically you see that what? Buyers are now exhausted. It simply gives you a hint that price will most likely what? Reverse from this point. So now let's go find an example of a doji candle. Now I can see one example. You see, price is what? Selling all the way to this point, and what happened? Doji what formed. You can see how large all these other candles that were moving down to this point are. Eventually it got to this point, and what happened? We got what? A doji candle. Then what happened? Power shifted hand and buyers started moving price to the upside. See another buy example here. Remember, you can see another buy example. Price was selling and doji formed. What happened? Price reversed to the other side. This, look at this, right? This is a zone, and what happened? Market was buying, got to this point, this zone here, and we can see a doji candle. What happened? Price reversed to the other side. So all these candlesticks I'm teaching you guys, it forms everywhere, but there has to be a context what to back it up. You don't just trade it anywhere you see it. It must be resting at a valid point. I don't know what a valid point is to you. Maybe a trend line, support and resistance, a structure for an SMC trader, maybe an FVG, whatever it is, right? It has to be what? A point of interest where what? You find these candles and use them for entry confirmation. So now let's move to the next one. Number 3 on our list is the one we call the Dragonfly Doji or the Gravestone Doji. The Dragonfly is classified under the bullish candlesticks, while the Gravestone is classified under the bearish candlesticks. So the Dragonfly Doji looks just like this, right? It looks just like this. Then the Gravestone Doji looks just like this. This is a bullish what? Candlestick pattern. And this is what? A bearish candlestick what? Pattern. That's a very long, obvious wick and just a very tiny body. Very tiny. Very, very tiny what? Body. Now, what's the logic behind it? Right? Market opened at that high and what? Traded all the way to this low. All the way to this low. And eventually buyers came in and pushed price back, but they failed to what? Push price above the opening price. But they were just very close to pushing price above the opening price before what? The session closed. That's an indication that at this point, buyers now have momentum. And where do you look for this guy? As I said, it's a bullish candlestick pattern. So meaning you look for this guy, right? At what? A support zone. You also use it for confirmation. At a what? Support zone. So price is selling with huge what? Sell candles, multiple sales candle. Then all of a sudden gets to your what? Your demand level. And this happens. It tells you that power has transferred from the sellers to what? The buyers. Likewise here also, right? Please remember the color doesn't matter. Focus on the logic and not the candle. So let's say market opened and eventually what? Buyers priced above the open price. Got all the way to this point with large momentum. And before you know, price rejected what? Drastically, almost what? At the what? The opening price, or just slightly below the opening price. So if such a thing should happen at a supply zone, it simply tells you that while you saw what? Multiple buy candles to that zone, what happened? At that point, buyers pushed their luck for the last time, but sellers did not agree to allow them break that particular zone. And what happened? Eventually, sellers pushed them back all the way to this point. Then that session closed. Then what happened? Price will start moving to the other direction. So now let's look for example on Gravestone Doji and Dragonfly Doji. So I can clearly see a Gravestone Doji here. That's a Gravestone Doji, but not looking too obvious, but that's a Gravestone Doji. And what happened? It what? Reversed price. Let's look for a bullish scenario. So let's look for a bullish scenario. You know, sometimes we confuse the Gravestone Doji and Hammer. Yes, because they print a bit similar. But the only thing is Hammer has at least a bit bigger body than that of Gravestone or Dragonfly Doji. But they both possess same logic. At this point also I can see a Gravestone here. That's a Gravestone, made the highest point. See, it caused a reversal at that point. I'm looking for a buy scenario. Okay, I have seen one. You can see price is what? Down. Price is what? Selling. And eventually what? A Dragonfly Doji printed here. And what happened? It caused a what? A reversal. Right? I can see what? A sell here. And eventually what? A Dragonfly Doji formed. And what happened? Price what? Reversed to the other side. So let's move to the next one, which is our Morning Star and Evening Star. Morning Star is a bullish candlestick pattern. Evening Star is a bearish candlestick pattern. Morning Star, say sell candle, a doji or a pin bar or a dragonfly, whatever it is, but something has to be here, or just a very short body candle. Okay, but the fact remains that what the next candle that will print should engulf this one here. Okay, the next candle that will print should what? Engulf this middle guy here. You see that is very long, it's very short, but it should what? Engulf this guy here. And this guy should be a sell candle why this guy should be a buy candle. Okay, that's the idea. This is a morning star. Then on the flip side, we have what? A buy candle here. Then inside of here should be a small body candle, could be a doji, could be a hammer, could be a gravestone doji, whatever it is, right? Then the next candle that will form should what? Engulf this one. It should be what? A sell candle, and it should engulf this guy here. All right? This guy here can be any candle, can be any color, can be a bullish, can be a bearish. Likewise, this guy here can be a bullish, can be a bearish. But this guy must be what? A bearish candle, and this guy must be a bullish candle. This guy must be a bullish candle, and this guy must be a bearish candle. This guy doesn't matter, right? And also, this guy must engulf this guy, and this guy must engulf this guy. Okay? Morning star, evening star. Same logic. Where do you look for the morning star? Since it's a bullish candlestick pattern, you look for it at your what? Demand zone. You get your demand zone, and eventually you can see this is the last what? Sell candle with large momentum. Then all of a sudden, a small body candle prints inside. It's showing you that sellers are now losing what? Their strength. And eventually, a buy candle prints that what? Engulfs this what? Sell candle. Right? That engulfs this candle inside of this point. Could be any candle at all. You're seeing this engulfing here. And what happens? Bam, to the other side. Same logic applies on this other guy too. Buyers are what? Buying. Then you can see the last what? Momentum candle of the buyers. Then eventually, we have a small body candle here. Then the next candle that prints engulfs this one. And it's a bearish candle. Then it engulfs this guy inside here. Eventually what? Price will what? Reverse. So let's look for example. I've already seen one here. You can see here, sell, and what happened? Morningstar printed, and boom, to the other side. Morningstar and hammer is the most frequent on your chart. It's very, very easy to spot. The one that is difficult to spot is the dragonfly and the gravestone. Very difficult, and doji also. But you see Morningstar engulfing, hammer, very, very easy. I just spotted one. This is a Morningstar. Okay. That's a Morningstar. This is also a Morningstar. That's a Morningstar. This is also a Morningstar. That is also a Morningstar. Oh, tweezer. Beautiful. Okay. That is also a Morningstar. This is an evening star. That's an evening star. An evening star. This is also an evening star. See? That's an evening star. Let's look for one more example. And this is also what? An evening star. Evening star. All right. So let's move to the next on our list. The hammer or pin bar. It's actually referred to the hammer candle because why? It actually looks like hammer. Okay. So while referring to the boat, we call it what? A hammer. A hammer. We call the boat hammer because it literally looks like hammer. It literally looks like hammer. Okay. But if you want to differentiate the both of them, you say a pin bar and shooting star. A pin bar, shooting star. Pin bar, shooting star. This is under the class of the bullish candlesticks, and this is under the class of what? The bearish candlestick. But don't let the color confuse you, okay? It doesn't matter the color you're seeing, but just understand the logic because sometimes it can swap. But if you understand the logic, the colors will not what? Confuse you. So now let's go look for examples. And like I said earlier, they're one of the most frequent, right? Even inside here, I can see a hammer. Okay, that's a hammer. I can see a hammer here. This is a hammer. Pin bar, shooting star. Pin bar, you see this one now is not showing red. Because I said, understand the logic and don't what? Get yourself confused. They print everywhere and they push price to the other side. Let's look for more examples. The pin bar and the shooting star. Here I can see one. I can see one. Okay, pin bar, See, shooting star, and it's what reverses price. Look at this pin bar. So it's one of the most easiest to spot on your chart. Very, very easy to spot. Okay, so let's go for the next on our list. The next on our list will be the what? The tweezer top and the tweezer bottom. Now the problem now is tweezer top is very difficult to spot. It's not like difficult, but it's not constant on the chart. It's not really constant on the chart, but we'll try our possible best to see how we can what figure it out. All right, so we have the tweezer bottom and the tweezer what top. Now the tweezer bottom is under the what? The bullish candlestick pattern, while the tweezer top is under the bearish what? Candlestick pattern. So now what's the logic? Right? Price is what? Selling in large momentum. All of a sudden it gets to your demand zone. And just at that your demand zone, another candle, another what? Bullish candle form, and it's exactly proportional to what? That of the previous bearish candle. Right? That tells you that the buyers are now matching what? The sellers. Because when price is selling, right, you see more of what? Large sell candles than that of what? A buy candle. Now you've come into a point of interest, and you're now seeing a buy candle that is what? Directly proportional to this what? Previous sell candle. That gives you a sign, a signal that now, I think buyers are now what? Interested in what? Moving price what? To their own direction. Then as for the tweezer top, market was buying and got to what? A supply zone or a resistance zone. And eventually you're seeing another candle that forms what? Another bearish candle that is directly proportional to that of the bullish candle. That is a sign that power has what? Changed hand. And what will eventually happen? Boom. Price moves to the downside. I can see one here. Oh, beautiful. I will not stress over it. Look at. This is what I call a tweezer top. You see? Price what? Just at that point, the momentum, see, directly proportional to each other. And what happened? Price did what? Started pushing to the downside. Okay? This is a tweezer top. Let's look for a tweezer bottom. Here I can see another tweezer top. Another tweezer top. See? Immediately formed. What happened? Price reversed to the other side. We don't just trade it anywhere like I said earlier. It has to be at a valid point before you trade it. Now I can see what? A tweezer bottom. See? A push to the downside and tweezer bottom formed. What happened? Price moved to the other side. Okay? Tweezer bottom, tweezer top. Tweezer top, tweezer bottom. Okay? So we've come to the end of our candlestick what? Patterns. Now, I want you guys to know that we have more candlestick patterns, right? But these are the ones that are very significant that if you Google it today, candlestick patterns, you see this. This is the one that people talk about the more. That is why I decided to highlight it for you guys. But that doesn't stop you guys from doing further research to know more candlestick patterns. But for the fact that you've understood my first video, which is where I try to explain the candlestick anatomy and the logic behind it, you can explain any candle. Whether you know the name or you don't know the name, you can explain it because you now know the logic behind what? Candlestick anatomy. If you find value in this video, kindly share the video, comment, share. Don't forget to come for my live stream where I teach how to what? Trade like the way I do. I teach my trading system. I come in the morning session to what? Give my trade outlook, while I come in the evening to teach my what? Audience. So if you're interested, make sure you what? Click that follow button, click my profile link to join my Telegram community. Thank you very much, guys, and I will see you on my next video. Bye, guys.